Hey stock market friends, welcome back to Chat ETF. Today, we're cracking open the hood of a fascinating little ETF, the BBUS. Now, this BBUS fella boasts a rock-bottom expense ratio of 0.02%. Yes, you heard that right. That means super low fees for you and potentially more moolah in your pocket. But is it too good to be true? Can this ETF really compete with the big boys of Wall Street? We'll be diving deep into the world of BBUS, exploring its ins and outs, risks, and even pitting it against some actively managed funds. Buckle up, because in the next few minutes, you'll know exactly if the BBUS ETF deserves a spot in your portfolio. Question 1. What is JPMorgan BetaBuilders US Equity ETF, BBUS? The JPMorgan BetaBuilders US Equity ETF, BBUS, is an exchange-traded fund, ETF, designed to offer investors exposure to a broad range of US stocks through a passive investment strategy. Here's a breakdown of its key features. Investment objective. BBUS aims to track the performance of the Morningstar US Target Market Exposure Index. This index is a market cap-weighted basket of U.S. stocks, meaning companies with larger market capitalizations, total stock value, have a greater influence on the index's performance compared to smaller companies. Benefits of using BBUS. Diversification. By investing in BBUS, you gain exposure to a large number of U.S. companies in various sectors, reducing your risk compared to holding individual stocks. Passive management. BBUS follows an indexing approach, which means it passively tracks the underlying index. This typically results in lower fees compared to actively managed funds. Broad market exposure. BBUS targets both large-cap and mid-cap companies, providing a diversified representation of the U.S. equity market. Additional details to consider. Underlying index. The Morningstar U.S. Target Market Exposure Index is a free-float adjusted index. This means the index only considers the portion of a company's shares that are readily available for trading in the market. Expense ratio. As with any ETF, BBUS has an expense ratio, which covers the fund's operational costs. This fee is deducted from the fund's returns, so a lower expense ratio is generally preferred. You can find the expense ratio details on the official BBUS fact sheet or through financial data providers. Current price and performance. As of April 16, 2024, BBUS is trading around $91.05. You can find the latest price and performance data on financial news websites or through your brokerage platform. Overall, the JPMorgan BetaBuilders US Equity ETF, BBUS, is a suitable option for investors seeking broad exposure to the U.S. stock market through a low-cost, passively managed vehicle. Question 2. What is the specific index the BBUS ETF tracks? The specific index that the JPMorgan BetaBuilders US Equity ETF, BBUS, tracks is the Morningstar US Target Market Exposure Index. Here's a deeper dive into this index. Market cap weighted. This index is constructed based on the market capitalization of the companies it includes. Companies with a larger market cap, total stock value, have a greater weighting in the index, meaning their performance has a more significant impact on the overall index movement. Free float adjusted. The Morningstar US Target Market Exposure Index is a free float adjusted index. This means it only considers the portion of a company's shares that are readily available for trading in the public market, free float. Shares restricted by major holders, like company insiders or governments, are typically excluded from the free float calculation. This adjustment ensures the index reflects the investable universe of U.S. stocks. Target market exposure. The target market exposure in the index name indicates it aims to capture a broad representation of the investable U.S. equity market. This likely includes companies across various sectors and market capitalizations, with a focus on larger and mid-sized companies. Key points to remember. This index is not directly owned by BBUS, but rather tracked by the ETF. The ETF attempts to mirror the performance of the index by holding the underlying stocks in similar proportions. The composition of the index, including the specific companies and their weightings, can change over time. However, the overall goal of representing the target market exposure remains consistent. Question 3. What is the BBUS ETF's investment objective and philosophy? The JPMorgan BetaBuilders U.S. Equity ETF, BBUS, follows a passive investment strategy with a clear objective. Investment objective. Track the performance of the Morningstar U.S. Target Market Exposure Index. This index represents a broad segment of the U.S. stock market. Investment philosophy. Market efficiency. BBUS operates under the assumption that the overall stock market is fairly efficient. This means that all available information is already reflected in stock prices, making it difficult to consistently outperform the market through active stock selection. Low-cost diversification. BBUS prioritizes providing investors with broad exposure to U.S. equities at a low cost. By tracking a market cap-weighted index, the ETF achieves diversification without the high fees associated with actively managed funds. Passive management. BBUS doesn't attempt to outperform the market through active security selection. Instead, it passively holds the underlying stocks of the target index in proportion to their weighting. This reduces management fees and allows investors to capture the market's overall return, minus the ETF's expenses. Benefits of BBUS's investment philosophy. Reduced risk. Diversification across a broad range of companies helps mitigate the risk associated with any single company's performance. Cost-effectiveness. Passive management generally leads to lower expense ratios compared to actively managed funds. Transparency. The index-based approach of BBUS provides clear insight into the ETF's holdings and investment strategy. Question 4. Does the BBUS ETF employ any specific weighting methodology? Yes, the BBUS ETF does employ a specific weighting methodology, market capitalization weighting. Here's a breakdown of how it works in the context of BBUS. Market capitalization, market cap. This refers to the total dollar value of a company's outstanding shares. It's calculated by multiplying the current stock price by the number of shares outstanding. Weighting in the index. Within the Morningstar U.S. Target Market Exposure Index that BBUS tracks, each company's holding represents a specific percentage of the total index value. This percentage directly corresponds to the company's market capitalization relative to all other companies in the index. Larger impact. Larger companies. Companies with a higher market cap will have a larger weighting in the index. This means their stock price movements will have a more significant influence on the overall performance of the BBUS ETF. Impact of market cap weighting on BBUS. Exposure to large and mid-cap companies. By design, BBUS primarily focuses on large-cap and mid-cap companies because these tend to have the highest market capitalizations within the U.S. equity market. Performance dependence on large caps. Since large-cap companies have a greater weighting, their performance will significantly impact the overall returns of BBUS. If large-cap stocks experience a strong surge, BBUS will likely benefit more compared to a scenario where mid-cap stocks outperform. Alternative weighting methodologies. It's important to note that market cap weighting is just one approach. Here are two other common weighting methodologies used in ETFs. Equal weighting. Each company in the index receives an equal weight, regardless of market cap. This can be beneficial for capturing the performance of smaller companies that might be overshadowed by large caps in a market cap-weighted approach. Fundamental weighting. This method assigns weights based on factors like a company's earnings, dividends, or book value. Why market cap weighting for BBUS? The choice of market cap weighting aligns with the BBUS ETF's objective of capturing a broad representation of the U.S. market. Since large and mid-cap companies generally make up a significant portion of the total U.S. market capitalization, weighting by market cap provides a passive way to achieve this goal. Question 5. How does the expense ratio of the BBUS ETF compare to other similar U.S. equity ETFs? The expense ratio of the JPMorgan BetaBuilders U.S. Equity ETF, BBUS, is very competitive compared to other similar U.S. equity ETFs. Here's a detailed analysis. BBUS expense ratio. BBUS boasts a remarkably low expense ratio of 0.02%. This means for every $10,000 invested in BBUS, you'd pay an annual fee of only $2. Comparison with similar ETFs. Many popular U.S. equity ETFs targeting broad market exposure fall within a range of 0.03% to 0.10% expense ratio. Here are some specific examples. Vanguard Total Stock Market ETF, VTI 0.03% expense ratio. Compare using financial websites. SPDR SP 500 ETF, VOO 0.03% expense ratio. Compare using financial websites. iShares Core SP 500 ETF, IVV 0.09% expense ratio. Compare using financial websites. Benefits of low expense ratio. A lower expense ratio translates to higher potential returns for investors. Since the expense ratio is deducted from the ETF's overall returns, a lower fee allows investors to keep a larger portion of the gains generated by the underlying stocks. Over the long term, even a small difference in expense ratio can significantly impact investment returns due to the power of compounding. Why is BBUS's expense ratio lower? There are several possible reasons why BBUS has a lower expense ratio compared to some competitors. Underlying index. The Morningstar U.S. Target Market Exposure Index that BBUS tracks might have a simpler methodology compared to some other broad market indexes, potentially leading to lower operational costs for the ETF. Management structure. JPMorgan Asset Management, the issuer of BBUS, might benefit from economies of scale by managing a large portfolio of ETFs, allowing them to offer BBUS at a competitive expense ratio. Question 6. What is the liquidity of the BBUS ETF, and are there any trading restrictions to be aware of? The liquidity of the BBUS ETF, JPMorgan BetaBuilders U.S. Equity ETF, is generally considered good. Here's a breakdown of factors affecting its liquidity. Positive indicators. Trading volume. BBUS typically has a healthy daily trading volume, which means a high number of shares are bought and sold each day. This translates to a high probability of executing trades quickly and at a fair price. You can find information about historical trading volume on financial websites or through your brokerage platform. Underlying holdings. BBUS tracks a broad market index, and the underlying holdings are likely to be large and mid-cap U.S. companies. These companies are generally well established and have a high degree of liquidity in their individual stocks. This contributes to the overall liquidity of the BBUS ETF. Potential considerations. Newer ETF. Compared to some long-established U.S. equity ETFs, BBUS is a relatively new entrant. Consider the launch date. While its liquidity is good, it might not yet have the same level of trading activity as some more mature ETFs. Trading restrictions. There are generally no unusual trading restrictions associated with BBUS. However, some standard brokerage limitations might apply. Minimum investment. Some brokerages might have a minimum investment amount required to purchase shares of BBUS. Order types. Certain order types, like stop-loss orders with very tight tolerances, might be harder to execute during periods of lower liquidity. Overall, the BBUS ETF offers good liquidity for most investors. However, it's always recommended to check the current trading volume and be aware of any potential minimum investment requirements before placing a trade. Here are some additional tips for assessing ETF liquidity. Bid-ask spread, the difference between the bid price, highest price a buyer is willing to pay, and the ask price, lowest price a seller is willing to accept, can indicate liquidity. A tight bid-ask spread suggests easier execution at a fair price. Market maker activity. ETFs rely on market makers to facilitate trading by providing continuous bid and ask quotes. Researching the market makers for BBUS can give you some insight into the level of support for the ETF's liquidity. By considering these factors, you can make an informed decision about whether the liquidity of the BBUS ETF aligns with your investment goals and trading style. Question 7. What are the primary risks associated with investing in the BBUS ETF? Even though BBUS offers a low-cost and diversified approach to the U.S. stock market, there are inherent risks to consider before investing. Market risk. This is the primary risk associated with BBUS, and it refers to the overall volatility of the stock market. Since BBUS tracks a broad market index, its performance will directly reflect market movements. If the U.S. stock market experiences a downturn, BBUS will likely suffer losses as well. Company-specific risk. Although diversification mitigates this risk to some extent, BBUS still holds a basket of individual companies. If a specific company within the underlying index performs poorly, it can negatively impact the overall performance of BBUS. Sectoral risk. The BBUS ETF focuses on large and mid-cap companies. If a particular sector these companies are concentrated in experiences a downturn, it can disproportionately affect BBUS compared to a more diversified ETF. Tracking error. Even though BBUS aims to track the Morningstar US Target Market Exposure Index, it might not perfectly mirror the index's performance due to various factors like fees and portfolio rebalancing. This is known as tracking error. Currency risk, if applicable. If you're investing in BBUS denominated in a currency different from the US dollar, you'll be exposed to currency fluctuations. A weakening dollar relative to your local currency could erode your returns. Management risk. While BBUS is passively managed, there's still some element of risk associated with the ETF issuer, JPMorgan Asset Management. In an unlikely scenario, the issuer's mismanagement could impact the ETF's performance. Liquidity risk, relatively low for BBUS. While BBUS generally has good liquidity, there's a slight chance that you might face difficulty entering or exiting your investment quickly, especially during periods of market turmoil. However, this risk is relatively low for BBUS compared to some less liquid ETFs.